What's up, everybody? Michael Silva here. You're watching episode 13 of The Weekly Scan. The Weekly Scan. The Weekly Scan is all about finding opportunities in the stock market for the week ahead. In today's episode, we will be using technical analysis to review 9 different stocks. Now, as for a quick disclaimer, these videos are for entertainment and educational purposes only. If you do not have experience trading stocks, being in the stock market, investing, please ignore my opinions. With all that said, let's go ahead and hop into today's show. Welcome to the computer. We are going to be going over 9 different charts, going over support, resistance, pattern, so forth. Okay, these are chart setups that look good to me and probably many other traders. Let's go ahead and hop into it. The first one we're going to be talking about is TLRY. TLRY. All right, this is what I see happening right here at the $9 level. Okay, this right here was a resistance, and now it is going to be support. Once resistance is broken and closes above it, it then acts as support. It acted as resistance here, here, and then when it broke, it acted as actually right here too. And then when it broke through, it tested it right back here, so it acted as support. And now it looks like the price is coming back to retest it again. Now, what I like about this retest, and I think it's going to bounce from this point, is because it broke out on high volume and is retesting on low volume. So how would I play this? I would just kind of enter in right above $9. Okay, I don't want to miss the entry. I'd have a stop loss probably just below the 20 period moving average. 20 period moving average is at $8.43, so I'd probably be at like $8.35. And then I would probably, my first price target would be right up here at $11, maybe just below that, like $10.95. And then I'd be looking at this probably $13 level here as another price target because it has some resistance in the prior area of the chart. So overall, a good risk versus reward setup. Nice breakout that took place on TLRY, and it looks like it's just honestly a little bit of a retest before it moves maybe a little bit higher. Now, like I said before, manage your risk. Okay, we're risking a small amount to potentially gain more than what we're risking. That is how you trade, okay? This could potentially just break and fall to the freaking ground, and you can lose all your money if you load the boat. So play it carefully. Here we go. Next one. All right, this is ticker symbol XRX, Xerox Holdings. Hello, here we go. It's been getting kind of beat up at this resistant level of $18, okay? Now, I want to draw this out here because it acted as resistance here, here. It acted as resistance. Basically, I guess I'm just going to draw the line all the way through. Okay, boom. So it basically gapped down, came back up, it acted as support, broke resistance, and then it's been kind of trending sideways, and then it acted as support here, then resistance, support, resistance, resistance, resistance. Okay, so this level, this $18 level, obviously the stock is having a hard time getting above it. Now, you might be thinking, well, what the heck? It's heading down right now. Yes, it is, but look at that friggin' volume, okay? There's 2 things I want to point out as far as the indicators go. The RSI looks like it's moving into oversold territory, meaning that if there's a lot of sellers, eventually, if it's oversold, there's going to be buyers that want to step in. Now, this volume lets me know that, hey, there's a lot of shares being passed back and forth at this moment. Now, these 2 candles are very bearish. So what I'm thinking is potentially we might get a retest and a double bottom play at this $14 level. Okay, so if the price can come down from $15.88 and touch $14, we might see a bounce from that point. So how I would play this is I'd be patient. I'd set an alert on my brokerage of choice, which is Webull, and I'd say if the price reaches $14.30 or whatever, notify me. So if it starts on its way down closer to 14, I'd enter in at 14.05, right? 14.05 or 14.03 or 14.10, whatever your risk is, and I'd have a stop loss at like 13.95 or 13.85, depending on what your risk tolerance is, or if you're day trading or swing trading. And then I would take profits probably right here back at $18 because I honestly think that if it comes down here and double bottom play, boom, and then boom, we might see a bounce upwards from 14 to 18 would be the price target. And if it breaks above 18, we can then see the price move higher. Okay, next area of resistance is 21 bucks, right in that range. So this is overall a pretty lucrative play, in my opinion, but you need to be patient. You don't just buy in right now because it's clearly moving downwards. That's a lot of volume that's to the downside. Now, it could very well just gap up the next day because of this amount of volume, but just keep an eye on it, and if it does gap way up and above 18, maybe wait for a retest of 18, okay? You need to be patient. You need to be patient. You need to be patient. Next thing that I want to point out as far as the indicator goes, look at the price, all right? So from right here, actually, I'll just say from right, basically, I'll just say the trend. It's basically a descending sort of triangle in this sort of sense, okay? This trend line moving down, came to the top, and now it's coming back down. But look at the MACD. The MACD is going upward, okay? So the MACD is moving up, the price action is moving down. That is a positive divergence, which is a good thing to have if you're long a stock. A negative divergence, where the MACD goes down and the price action is going up, that is where you need to proceed with a little bit of caution. Now, there's no one indicator that's the holy grail by any means, but that's something to take note of. Price action's moving down, MACD is moving up, so positive divergence, we might see that retest and we might see a breakout moving forward. That's XRX. Put it on your alerts. Be patient on that one. Next, stock. Ticker symbol FLEX. Flex. Okay, I'm going to be quick on this one. Area of resistance, $10.50. Okay, this little tiny candle right here, it went down 2%. Okay, down 2% for the day. The RSI is not saying anything. MACD is not really giving us all too much. But look at that little indecision candle. Little tiny guy, okay? It was one going up and then down, and then it stopped right there where it basically opened up, okay? But then compare that to the amount of volume that came in. What the heck is going on here? Well, look at the pattern. It looks like an ascending triangle, right? Boom. It looks like it's making it. It did it right here at the bottom of this trend line. So with all this volume, and this volume is a lot of volume if you go back in the history of the chart, it's significant. So are we going to see this potentially bounce and break through? Well, this kind of volume leads us to believe that there is possibly a big move going to take place here in the near future. So how would I play this? Well, I would probably just have a stop loss below this $9 range because there's been some price action right around that area. So maybe, 8, 7, 8, I don't know, whatever your risk tolerance is. So 895 or 885, or if you want to be below the 50, you can be at 50 period moving average, that is, 865, whatever you feel comfortable with as far as your risk tolerance goes, because, that's all we can manage is our risk. Now, where would I enter in? Well, I would enter in, it really depends on where Monday takes place. I would enter in right here at this trend line and I'd speculate a breakout. That's what I would do. And then I would probably take profits right here before the breakout, and then maybe let the remaining shares play out to see whether they move up and break out through the 200 period moving average and up higher to this $12, $11.50 range. So keep an eye on this one. That kind of volume is a big sign that, hey, there could be something big taking place. And keep in mind, if it does break down this trend line, obviously we can see a pretty aggressive move to the downside. So manage your risk. I'm going to say that every stock. Next stock. All right, here we go. Ticker symbol ESNT. I want to keep an eye on this support area right now. Okay, it did kind of like an indecision candle. Not much information right here other than this level I'm going to be keeping an eye on. It looks like it's at 32 bucks, 33 bucks, that range right there. And it acted as resistance here, basically here, acted as support and resistance right throughout here. And then it broke above it on decent volume. And then now we're having that retest. And there's a lot of volume that took place. All right, so my question is, will this stock head higher or will this stock break down? Well, it really depends on where it opens up Monday. But say if it does open around this price or up in this range, this could be a really good bounce play where you can just buy down here, have a stop loss under this 32.50 range, or what, you got to bring up the chart where you can see it. This price label is kind of in my way. Maybe since this is at 33.05, just have it at 32, 85 or something, and you can enter some shares here, have a stop loss right there. So that's what you're risking for potential upside all the way to the 200 period moving average. It looks like you have some overhead resistance at 42.50, but man, $33 to 42.50, and you could take some profits off the table right here at 37.50. That's a good risk versus reward trade, definitely 3-to-1. So I like this trade. I like the setup. You know, MACD looks pretty bullish. RSI is not giving us much, but keep in mind this also can be volume to head to the downside. So it really is just going to depend on where we open up Monday. But keep an eye on this one as well because it does look pretty good. All right, on to the next. Ticker symbol NE for Noble Drilling. It's so noble. Now, here's a couple things that stick out to me on Noble. We have the RSI moving into oversold territory, meaning potentially there might be buyers stepping up. Well, look at the volume. The volume really picked up. Holy moly. Are the sellers done selling? I guess we'll find out here opening Monday. And then the MACD, look at the MACD. Boom. It's moving upwards while the price is moving downwards. Okay, this has a very specific trend line right here. So will the trend be broken? Keep an eye on this one, but this would be a very good play to play a breakout of this trend line right here. The price is, 15 at it's at 13 cents. So I would have a stop loss, below the low of this candle, and the low of that was 12 cents for the day. So maybe, 11 cents or 9 cents or 10 cents. I mean, you got to understand this is such a like a low price stock. So you got to be very aware of, a 1 cent move is like 8% on where it's at right now. So, or 9%. So manage your risk on something like this. Don't go buying freaking 10,000 shares just because you can afford it and then, load the boat and hope for a breakout. Now, you might get lucky, okay? But if you get lucky from something like that, chances are you'll do another trade like that, and then you'll do another trade because all of a sudden you think that you're building up some sort of skill, but then all of a sudden it only takes one trade to put you on tilt and wipe out a portfolio. So manage your risk. Nice little setup right here. Watch the break for that trend line. On to the next. All right, here we go. Ticker symbol JEF for Jeff, Freeze Financial Group. Okay, what do I see happening? Well, I just wanted to point out the large amount of volume and kind of where it's taking place. There was a trend line moving down, shaku, and then it really just gapped above it and broke up, and now it's kind of moving downwards. So my question is, will it retest this trend line down here at 1350? Because, I mean, there's a couple areas of support here. One, you have the trend line. 2, you have the 20 period moving average, and then 3, you have the 50-day period moving average. So was this a breakout to potentially move higher up into new levels? I would say if it is, then I'd say we'd have a price target here of $16.50 because there's some kind of $17 would be a good price target right there. And then I would also say right here at the top of this, which was at $16, so $16, $17. Then you have some overhead resistance at the 200-day period moving at 18. So if the retest comes down here and you want to just risk, put the stop loss right here at, the 1245 to, 1260 range, and then just wait for a retest, you'd only be risking this much to potentially earn that much. That is a very good risk versus reward opportunity. A lot of volume came in. And then I also want to point out here that the MACD, this is sometimes what happens on positive divergences. The price action was moving down, the MACD was moving up. That's a positive divergence. And then you got that breakout. Nice little move. Whoop, whoop. Nice little move. Whoop, whoop, whoop. Okay, so put this one on the alert. Be patient for it. Don't just hop in just to hop in. But that kind of volume might be like, interesting. There might be a big move coming. We will see, but wait for a retest. And if it doesn't come, move on to the next one, okay? There's plenty of stocks out there. Sheesh. All right, next stock. Going to be quick on this one. This is DIS, Disney stock. All right, check it out. The candle that formed. Nice little hammer candle. Will we see a bounce more to the upside because of this retest of the support? Well, very possible, but I just wanted to call out this. Watch for the window to be closed, because if we can get a window to close at this $110 range, you might see a bounce from that point. So put this one on the alert list. I would say set an alert for if it comes to a 110.15 or 110.25 or 111. Just say 111, because if the price comes down to 111 and starts heading lower to close the window, and by the window I mean this, from this day it gapped up and and now it's acting as support. So once this support is broken, it'll then become resistance. But now that this acted as resistance here, here, and here, it's going to act as support. So if the price comes down, we might see a bounce from that point. That's where I'm getting at. So if the price can come down here, this would be a good little trade opportunity, a good little scalp to potentially go from 110 to 114 or even potentially higher at that point. So put that one on the alert list. Hallelujah, bada boom ba. Next stock. All right, ticker symbol PRTY. A lot of these stocks this week, you got to be patient with, okay? This one specifically right here, I'm just looking at this level, 90 cents, okay? The price really took a run for it, up 26% of the day, oversold, overbought in the RSI, okay? The MACD looks pretty good, but this is a very scary looking candle, okay? And what I mean by that is when it broke out of the 90 cents, a couple days, boom, it opened here and then moved itself all the way down to this level right here, the $1.20. So high volume, if we can get it to pull down all the way to this 90 cent range, it'll give you a good risk versus reward opportunity because you might see a bounce from that point. So how would I do this? Well, I'd maybe enter in at, 95 cents, okay? If the price comes down at 95 cents, I would enter in and then I'd have a stop loss at, 87 cents or 89 cents, right below, probably not 89, maybe a little bit more than that. I would give it some more room. 85 or 79 or whatever you feel comfortable with. But if you enter in here and this is your risk, you're risking this much right here for a potential reward to come back up to that level. Clearly it's a 3-to-1, 3. Your reward is 3 and you're risking 1. Perfect little setup. That's my drawing. You like that drawing? PRTY. Be patient on it. Wait for the price to come to you. If it doesn't, then it is what it is. Go to another stock. Simple. Sheesh. Next stock. All right, last stock of the weekly scan. This is ticker symbol SNAP. Snapchat. Snappity chappity. All right, what do I see happening here? Well, I saw this nice little trend line here and then a resistant kind of area right up in this range, just above 18 bucks. And we had a breakout right here just on Friday. So the breakout happened to be on some volume that's picking up. So I honestly think that this has some potential to hit up in this $20 range before we have all that overhead resistance really kick in. So I mean, I would say if the price does come down a little bit more to this 18, just above $18, let's say if you can pick up shares at 18, 18.15, 18.20, 18.10, and then have a stop loss at 17.95, just say. If you want to give more room, you could do that, but I want to keep it really tight, that risk. So this would what you'd be risking to potentially just have it bounce right up to this $20 range. And then from that point, I'd probably be very aggressive because the RSI is heading into the overbought territory. And I would just want to capture those quick profits. But it does look like this $20 range right here with this overhead resistance, it might just pull the price pretty easily up to this point and then maybe retest back over down here and then move higher. It's going to be interesting to see how this one plays out for the weeks to come. But it definitely looks like it can go from $18.94, so basically 19 bucks to 20 bucks very simply. So if we do see a little bit of a pullback, that'd be nice to get in for a good risk versus reward trade right there. All right, everybody, that's all I have for you today on the weekly scan. I'm going to close it off talking about managing risk. That is the only thing that we can control in this market. So what I'm saying is don't just load the boat on one particular one. Now, if you understand technical analysis and you do want to leverage up a little bit more on a specific particular trade because that's your risk tolerance, by all means. But don't just do it with hopes and wishes without fully understanding what could potentially happen if it turns around or the pattern breaks. These stock, like when stocks work out, they look great. Like I last week, a lot of the stocks played out well, and other videos that I did play out well, which makes me look like I know what I'm talking about. But the reality is the market was working in my favor. The market could also not work in my favor, and it could not work in your favor. So a lot of the chart patterns that I throw up could fail. Okay, so that's why I say manage your risk. Risk 1 to get 3. If you do that over and over again, chances are you're going to become successful. And when you put the patterns and indicators into your favor, it's like those people from MIT that counted blackjack, right? Okay, going to the casino doesn't, your odds are already against you. Well, stepping into the stock market with no knowledge about risk management and technical analysis, it's already against you. So how do you put things into your favor? Well, you got to understand the technicals, the indicators, the way the market moves, right? And then most importantly, you got to understand how to manage your risk and scale up accordingly. Don't just over leverage because you made a few trades out that worked out. So that's all I wanted to say. I can't say it enough because it worries me. I don't want people to lose money. I want people to feel good when they take a small loss because they know that they manage their risk accordingly. All right. I'm running out of breath. Okay. I'm running out of breath. My throat hurts. Sheesh. I don't think anybody's watching right now. If you're watching still to this point, comment down below. 1, 2, 3. If I get some comments about that say 1, 2, 3, I'd be pretty shocked. All right, hasta la vista. See you next time on the Weekly Scan. The Weekly Scan.